All right, all right. It is Sunday, October 6th, 5 p.m. Eastern Standard. Before I jump into discussing setups for the week, I want to just give a little bit of general commentary, and this will be in the market report that I upload likely tomorrow. A little bit behind here, had a wedding yesterday, so a little bit of a lazy day today, just kind of playing catch up, and not going to have time to write the report this afternoon, so probably get that out tomorrow morning. But with that said, what are we seeing in the markets? A couple of things that I find really interesting. So if we start just kind of browsing through these charts here, one thing that I have noticed that is a little bit, I'd say, scary and not good to see is ever since the rate cuts, bonds and notes are dramatically falling here. Now, one would think these would be going up given the fact that we had a 50 basis point cut, but these charts look really, really bad overall. Even if I switch this to the daily, we're getting a lot of selling pressure on both of these. I think it's a little bit surprising. I mean, look at this 5 year notes, it's just diving. And then even the 30 years starting to have a lot of selling pressure. You would think the fact that we had a 50 basis point cut, these would be going up, but we're seeing the complete opposite. And the speculators getting that wrong. The other thing I am noticing is this impulsive move into Chinese stocks. I have friends sending me texts and people talking about, hey, it's time to buy China, buy China, buy China. Chinese stock index is up something like 40% over the past month since the stimulus from China. Would I be chasing a move like that that's already happened? And the answer is no. I'm already long in a number of different stocks that are Chinese stocks that really beaten down, such as Baidu. And I really liked Alibaba, although I did not get into that trade. Had people saying, hey, I think it might be time to buy Alibaba. I mean, if we just pull up a chart here on the side, I would not be buying. I don't chase moves here, and I think that's just too late. I would not be getting in on a chart that looks like this after you've already had a 40% impulsive move from stimulus news. It's just you don't chase trades like that. When everyone starts talking in the market of hey, time to get on this, and you have people that maybe don't even trade that often that are all of a sudden saying, hey, buy this and buy that. That is really a sign that it might be a little bit too late and that the market may even end up reversing here. So I wouldn't be shorting these either, but I would not be getting long if I hadn't already been long in a couple of these. The other thing I want to highlight is all of the news that we're seeing right now should be bearish stocks. And I am starting to recognize that whether it be stocks or gold, it's very difficult to time when to go short on these. And I think more often than not, you really should be on the long side waiting for pullbacks to go long or not in at all. I don't like the idea and the concept of shorting stock market, which is predominantly going to go up for the foreseeable future. And same thing with gold, at least in this current um, macro cycle that we're seeing of gold, this kind of commodity super cycle. These things are just ripping higher. You don't want to be trying to short these. I mean, the odds are it's going to continue to go up. So it's better to buy and go long on pullbacks than it is to try to short these. So even if you have to stay on the sidelines, it's better than taking bad trades. And I've learned that over this year. Almost every bad trade that I've made on gold has been trying to short it. Better to just sit on the sideline and just not try to short these. And same thing with the stock futures here. It's not good to try to short things that mostly are going to go up more often than not. So that's just my general commentary there. The other thing that I am noticing is on the oils and energies. These things were getting really beaten down until we had war and economic war news. We're now talking again about the Strait of Hormuz, and we're talking about Iran and the conflict escalation between Iran and Israel. That is really the only reason that's caused such a significant impulse on crude and heating oil. Natural gas was kind of climbing before that. So I just want to draw attention to that. I think we're starting to come into some resistance levels here. We're getting pretty close on crude and on heating oil. So just something to be cautious and aware of. Might make sense to pull profits if you're in on these kinds of positions. And if you're not, it might be good to wait for a pullback and don't try to chase. And that's something last week I was considering pulling this up and starting to chase this move because it was just crude and heating oil are just rocketing the past couple of days, but it's really just better to sit on the sidelines and wait. And if this war news does kind of die down as it has historically, I'm not saying the war and things like that are over, but I think it's good to not try to chase moves and wait for pullbacks. So I'm going to hang tight. I'm going to try to get in at least on a bit of a reversal. We have some really solid profit right now this year. So we do have room. And it's funny when we talk about trading philosophies, I saw this in a Discord channel that I am a member in, and people were saying when you're in profit, right? When you're having a good year and you're pretty well in profit, that's actually the mentality you should consider having is that that's more room for us to make mistakes and have bad losing trades, right? And that doesn't mean to be reckless and go against your process. It just means that you can have the confidence to go in on trades knowing that you have a buffer of positive, net profit. Um, you can make a lot of bad trades and still be in profit. So it makes your mentality a little bit easier going into these. When you see a setup, you see the opportunity, and you follow your process. You don't have to worry, and it's the mental side of trading here. If you're already in so much profit, you don't have to worry as much. So that's just kind of some commentary that I'm thinking of as I'm saying that. I'm seeing a little bit of a maybe resistance line going to just draw out here on this corn chart. But yeah, and grains actually are starting to get pretty crowded, I would say. But yeah, let's talk. We've talked kind of general economy and market. What are we actually seeing on these charts and the setups? So let's hide some of these on the side. Still seeing the Russell short as a setup, but not something that we're probably going to take here. We'd have to find some news failure and reason to get in. Australian dollar, we're also seeing as set up to go short. But again, we're going to have to find some news failure and some reason for us to get into that trade. Crude and heating oil, I would say, are still long opportunities, but I would be waiting for at least a little bit of a pullback here, probably down to this, a couple of these support lines now, previous resistance. At least a little bit, a couple percent of a pullback before I would consider getting back in those. We want to be buying low and selling high. South African Rand is another one that is starting to have a bit of a reversal. I don't follow the news enough on that one. I'd have to really kind of pull up some charts and see if there's any news that we could fade if there's a failure on the chart. Soybean meal is looking like it's crowded or close to being crowded to go short. Actually, got to write that in there. Short. Platinum, as far as metals, is the most crowded on the long side from speculators. So this is one that we may consider going short. But I actually like this palladium chart a lot more here. And the reason being is we're seeing a lot of technical resistance here. We have this kind of top support line. We've got one of these that runs from this channel on the up move. And then we've got this kind of bottom line here. And this one actually runs all the way back a couple months ago. We're seeing a lot of kind of crossovers here where I'm seeing a bit of resistance here, and I would like to go short around $1,020 to $1,030. If we can get a short in executed there, probably a short-term move, but I would like to see this come back down to maybe like 940 to 970, and we would take profit there or at least adjust our stop. So I do see this as a good trade. It's been kind of chopping sideways here and bouncing off the top level resistance. So I see palladium starting to fall here. Other things that I'm seeing in the charts, let's take a look here. So bonds, obviously some significant selling pressure. We're going to stay on the side of those because technically they should be going up, but they're really just getting crushed. So there might be a short-term day trade here to try to go long and fade that down move. I don't see them dropping substantially, but I don't see them breaking all-time highs either. Oils we've talked about. Energies, as far as natural gas, we're in on a small short position. I see this potentially rolling over. It's had a pretty significant impulse move, and now there's another gap to fill in the chart up here. Currencies, we are in short on the yen, and this thing is in some phenomenal profit. I think we're in about $4,000 profit as of right now. I've adjusted my stop when I've identified this kind of head and shoulders. To me, this is a shoulder. This is a head with a neckline to this right shoulder. I've actually adjusted the stop, not to the top of the right shoulder, but actually to this recent kind of sell-off. And we're getting pretty close to what I would say is a conclusion of this head and shoulder pattern. So it's usually from the neckline, you measure the distance to the neckline, and then measure the same move down. And that's going to be your profit target on a Head and Shoulders completed pattern. So we're getting pretty close to that. I believe it's one of these two alerts that I've set up here. So we're getting really close here. If we could break to the bottom, I would look to probably get ready to cover this position, or at least move the trailing stop. Dollar, I'm also liking. I did take profit on this trade a little bit early, and I wish I had stayed in it and probably gone a little bit heavier in size. We had this, wedge pattern that broke out to the upside, and dollar is now just continuing to rip higher. So I would like to see dollar kind of find some support here. There is some top level support if I look for our previous Head and Shoulders on the daily. Let's see where this was. I believe it's something like this. So that was our head, left shoulder, and right shoulder. And if we drew a line to the neckline, something like that, we would probably be looking at getting back to that neckline. Probably somewhere around, yeah, I mean, we're getting pretty close to it actually. Probably something like that would be the Head and Shoulders. So if we bounce off this Fibonacci slash and the 618, it's also 618, which is a very key support level or resistance level. If we bounce off this and head lower, I can see that being a good opportunity for us to get back in long on the dollar, but also to, as the dollar falls, we're probably going to see crude oil start to go up, gold start to go up on a falling dollar, since those are all priced in dollars. So that's something else that I'm seeing in the markets here. Outside of that, as far as trades we talked about South African Rand, the energies. I like silver long here, but it is getting a little bit crowded, and we're ripping higher on price, so I'd like to see a bit of a correction before the next move higher. Palladium we talked about. I like going long on SPY, the S&P. We need to find an area that would make sense to go long. Bitcoin, actually really surprising here on Bitcoin and Ethereum, but mostly Bitcoin, or I would say even further Bitcoin. Speculators crowded on the short side, commercial starting to go long here. So this looks like a really good opportunity for us to start going long on Bitcoin. Probably not for me to trade it. I mean, these charts are very volatile and hard to get a move in the right direction. However, I'd probably look to add some additional Bitcoin to my long portfolio. Anything around 60,000 and less, I think I would look to add to my Bitcoin positioning. And then we've got some stocks that we're taking a look at throughout the week. But that's the general commentary. We would think that markets should be going down, bonds should be going up, and we're really seeing a little bit of the opposite. Markets at all-time highs, bonds are starting to fail. We've got war and escalation. We've got a election in the U.S. here coming up soon in about a month. A lot of reasons to be bearish on stocks, and yet they continue to rip higher. So, yeah, we're going to have to see how this plays out and how things play out with the election. Energy is also heavily tied to that. So, as we're looking at getting in and out of energy positions, Trump is pretty much, I would say, bearish oil, since we're talking about doing a lot more drilling, and um, Kamala would be bullish oil. So that's just the general sentiment there. And if we even pull up, I haven't actually looked at this in a little while, but I'll pull this up on another screen real quick. If we look at the election predictions, Kamala is actually up about 5 cents against Trump on PredictIt, and Trump's actually up on Polymarket. So interesting how a little bit of a difference there on these two for the elections. And then everyone seems to be betting that Kamala is going to win the popular vote, which is also interesting. And then if we look at PredictIt, I don't know if they have that on here, but let's see. Yeah, I don't see that one. Anyhow, yeah, it's well, Biden resigned during his first term. That one must be over. Anyhow, that's what we're looking at this week, and we'll talk again during the week on additional setups and how things play out. Thanks for listening.